Hi everyone, this is Jason Burak of Wall Street for Main Street. Today is Sunday, June 27th, 2010, and this is your weekly commodities market wrap-up for last week, and we will also be previewing next week too. Just wanted to talk about some current events and stuff like that. The G20 meeting had been going on this past weekend and earlier in the week, and basically what happened at the G20 up there in Toronto, besides all the protests, was that the U.S. is now the lone country that still wants stimulus. So you had Obama and Christina Romer, who's his economic advisor, and also Bernanke pretty much championing for stimulus, and the rest of the world, for the most part, does not want any more stimulus. Now, I'm probably generalizing there, but in general, that's the trend. Most of the countries, especially Europe and other stuff, want austerity. Now, austerity is not quite as deflationary. It just means some cutting back. It does not mean completely, stopping this government spending. There's still a lot of crowding out going on. Now, let's go over to some commodities and summarize how some of them did last week. Oil is still slightly moving up. Oil closed around $79 a barrel for the week. It is still facing some overhead resistance like I said last week, at the 80, 82, and 85 levels. If it can get through those, it's going to challenge the mid to high 90s. I'm not sure if it will, but it looks like, in terms of current events, that a hurricane or a tropical cyclone or tropical storm, whatever the category is at this moment, I'm not exactly sure, is going to be approaching the Gulf over the next week or two. So hurricane season is starting. The BP spill is really screwing shit up. And obviously that means higher oil prices, at least in the short term. Long term, I think that also means higher oil prices. As right now, the moratorium, Obama and the White House are still fighting the courts, who have suspended the hold that Obama put, so they are now back to drilling oil again, I guess, in the Gulf, because they said the 6-month drilling moratorium was not accurate. So as of right now, that's going to hold, and they're still going to be allowed to drill for oil in the Gulf, but we'll see how that holds up. In the short term, though, I definitely think oil is going to go a little bit higher. It's getting at the higher end of the trading range, but those key resistance levels that I mentioned, I would definitely follow those. If you're a trader, you might want to put in buy orders if they pass those resistance levels. And if you think oil's toppy here, those might be good shorting points. So those seem to be the mark there. This might be a good chance here for some options plays, for some option straddles, maybe around those strike prices. Okay, gold and silver also are facing some overhead resistance. I thought gold would break out. Gold is still grinding higher along with silver. It is doing a nice job. There's still a lot of resistance to it. The Russian central bank, over the last month, it was announced during this week, has continued to add 1.1 million ounces of gold to their reserves. So Russia is effectively trading dollars and euros for gold. They're basically shorting dollars and euros. That's what that means. Let's see here. Silver closed at $19.10. Silver's got to get above 20 and 21. Those are the key resistance levels. Silver is grinding higher, doing a nice job of it, I think. Natural gas got shot down from 5. I think natural gas is showing some pretty good strength here, though. It looks to me, because this is the summer, and this is normally not when natural gas is strong. Like I said, I definitely think the natural gas market is reevaluating, and I would take a look at the oil and natural gas stocks rather than a natural gas index. As an investor, I would like to look to get long in some of those oil and natural gas producers that are not necessarily pure natural gas plays. I would probably look for more of the 50-50 mix companies that have 50% oil, 50% natural gas. If you can find those natural gas companies that have better profit margins, some of those are the wet gas natural gas companies that I gave you some technical articles on last week. One of the best plays for the wet gas for these natural gas companies is in the Eagle Ford, EAGLE-FORD shale in Texas there. So if you can find natural gas companies with plays there, those are some of the companies with the best economics and the best profit margins for the natural gas, because they have the wet gas and they're able to sell the other, not just the dry gas, the methane, they get the other stuff to improve profit margins. So that would be a good play long term. That's looking like a good play long term. There's a lot of small and mid-tier independent natural gas companies that are out of that area. So I would start doing some research there. I think you can get long there. Copper actually ended up over $3. So Dr. Copper is saying that maybe the rest of the world, the emerging markets, are still recovering and doing a good job of growing, within their own economy and actually consuming more of their own production. So I don't think this is just a China story necessarily for copper buying. I think anyone who needs a smart grid, who wants to improve their electricity usage, like efficiency and actual stuff like that. If you look up the smart grid and you do some research and you read some alternative energy books or articles, you'll see that copper and other material is going to be required for building a smart grid. And China actually is trying to implement a countrywide smart grid. It's going to be very, very expensive. The U.S. has talked about it, but it's going to cost a few $1 trillion. I'm honestly not sure if we can afford it. Let's see what else I wanted to talk about. Agriculture is pretty much stagnant here. It's not doing anything exciting like the energy and the metals are. So for the most part, this week I'm just going to see if there's any other fallout from the G20. The euro had a technical rally. I think the long-term trend on the euro is down. I think the euro could end up 1-for-1 with the dollar in the long term. The dollar rally appears to be topping out too, at least technically. But I think the long-term trend, obviously, for the dollar is down as well. Not a big fan of paper fiat currencies, guys. But that's just me. Anyways, guys, have a great week. I hope you had a great weekend. And I'll be speaking to you probably during the week. I might give you a little update on BP. A lot more news is coming out. We're getting a lot more documents and investigative journalism, actually, on BP. Saw a really good documentary on the Wall Street for Main Street fan page from BBC. That they did a story on BP and interviewed some employees who are actually on the rig. So I would definitely check that out. I do not think BP has very good long-term future prospects. Some of the other companies involved, I think, are going to be suing BP if they haven't done so already. So those guys who are blamed in lawsuits like the Transoceans and the Anadarko Petroleums and the Halliburtons and the Cameron Internationals, I think a lot of those guys are going to be all suing BP. Because I think it's pretty clear based on my research, and I've researched this a lot, that BP was grossly negligent and maybe even criminal in some of the stuff they did. So I will talk to you guys early next week. And have a great weekend, or I hope you're having a great weekend. And if you watch some soccer, World Cup was pretty good. And I'm happy the Lakers won the NBA championship last week. Okay, bye.